Today we are looking at an official dispatch from General Department of Taxation. Number 14/CD/CT dated June 27th, 2026. The key message is that the government has issued Decree 245/2026/NDCP and tax authorities must quickly implement the extension of tax payment deadline for 2026. This is not a tax exemption and it's not a tax reduction. It is a postponement of payment deadlines, which means the taxpayer still had to pay the tax, but receive more time to do so. The dispatch highlights four main extension groups. First, value-added tax may be extended for up to 5 months for tax arising from May to September 2026, including the second and third quarters of 2026. Second, business households and individual businesses may receive up to 5 months for value-added tax and personal income tax due in 2026. Third, enterprises may receive up to 3 months for provisional corporate income tax payments for quarter 2 and quarter 3 of 2026. Fourth, land rent may also be extended for up to 5 months, but only for 15% of land rent payable in 2026. The practical takeaway is simple. Accountants should identify whether the company is in the eligible group, separate its tax type, and map the original due date against the extended due date. The extension halves cash flow, but it does not remove the tax liabilities. The second important message is about procedure. City Pass says that taxpayer must send a written request for the tax payment extension directly to the tax authority. This means the extension is not something accountants should simply assume. The business needs a formal request document and should keep evidence that it has been submitted. The deadline is also very clear. The request must be submitted no later than November 2nd, 2026. For practical accounting work, I would suggest 3 steps. Step 1. Check eligibility under Decree 245/2026/NDCP. Step 2. Classify the tax type carefully, because value-added tax, personal income tax, corporate income tax, and land rent do not all follow the same extension periods. Step 3. Prepare and submit the written request before the deadline. Then update the payment calendar. A common mistake is to treat the extension as a cancellation of the tax payable. That is incorrect. The company should still record the tax liability in the accounting records when it arises. The extension only affects the payment timing. Therefore, the accounting files should include the official dispatch, the decree, the reference, the extension request, and tax calculation and revised payment schedule. This helps the company explain the treatment clearly during internal review and tax inspection.